Let's be honest, most of the credit score advice floating around on TikTok or YouTube sounds like it was written back in 2010. Pay your bills on time or don't use your credit cards too much. Sure, those things matter, but in 2025 the credit game has changed. Lenders, banks, even landlords in the US and Canada are using new scoring models, new data points, and new technology to judge your financial life. If you're still following outdated tips, you're probably leaving points and money on the table. That's why in this video we're cutting through the noise. I'm going to show you credit score hacks that actually work in 2025, backed by real changes in the way companies are measuring your creditworthiness. These aren't theoretical ideas or gimmicks. These are practical, easy steps you can start using right away, whether you're in New York, Toronto, Dallas, Vancouver, or anywhere else in North America. Think about it, a higher credit score doesn't just mean you're good with money, it can save you thousands of dollars a year on interest rates, help you get approved for the apartment you really want, lower your car insurance, and even improve your chances at certain jobs. In today's economy, with interest rates bouncing up and down, rent climbing in cities across the US and Canada, and credit card companies tightening their policies, every single point on your credit score matters more than ever. Over the next few minutes, I'll break down exactly what's changed and how you can use those changes to your advantage. We'll talk about simple tweaks like how often you pay your bill, how to get your rent and subscriptions counted toward your score, and the right way to ask for a higher limit. These are small moves, but when combined, they can add up to a big jump in your credit score. And don't worry, this isn't going to be a lecture full of confusing financial jargon. I'm keeping it super clear and practical, so by the end of this video you'll know exactly what to do next. My goal is for you to walk away feeling confident, empowered, and ready to take control of your credit future in 2025. If you've ever felt frustrated because your score won't budge, or you're just starting out and want to build credit fast, stick with me. In the next few minutes I'll share hacks you probably haven't heard before and that banks and scoring companies are already using right now. Let's dive in. In 2025, your credit score is more than just a number on a report, it's like your financial passport. Whether you live in Los Angeles, Miami, Toronto, or Calgary, that 3-digit score travels with you and silently speaks for you every time you apply for something. It tells lenders, landlords, insurance companies, and even some employers how trustworthy you are with money. And the reality is that score affects far more than most people realize. Let's start with the obvious. If you're trying to get a mortgage or a car loan in 2025, lenders aren't just glancing at your score anymore. They're running your entire profile through updated scoring models such as FICO 10T and VantageScore 4.0. These models don't only check if you pay on time. They look at your spending patterns, your balances, even how you handle personal loans or buy now pay later programs. A higher score can mean thousands of dollars saved over the life of a loan. A lower score? Higher interest rates, stricter terms, or flat-out denials, but it's not only about loans. In many U.S. states and Canadian provinces, your credit information can also affect your insurance premiums. Auto and home insurers often give better rates to people with stronger credit histories. That means a good score can save you money every single month, even if you never borrow a dime. Then there's housing. In competitive rental markets like New York, Vancouver, or San Francisco, landlords regularly run credit checks before approving applications. Two people with identical income might apply for the same apartment, and the one with the higher credit score often gets the lease. A good score can literally open doors, sometimes quite literally the door to your next home. Employers are also paying attention. While not every job requires a credit check, some positions in finance, security, or government do. A strong score can help you look more responsible and stable when you're up for that dream job. And here's what's new in 2025, more alternative data is being used. Things like rent, utilities, streaming subscriptions, and even certain fintech accounts are now being factored into credit scoring. That means your day-to-day habits count more than ever, which creates both opportunities and risks. If you know how to play the game, you can build credit faster. If you don't, small mistakes can hurt you more quickly. So why does your credit score matter in 2025? Because it's woven into nearly every major financial decision you make in the US and Canada: loans, housing, insurance, even some jobs. Understanding it isn't just smart, it's essential for protecting your money and your opportunities. And in the rest of this video, I'm going to show you exactly how to use new hacks to boost that score and stay ahead of the game. Alright, let's kick off with a hack that almost nobody is using but can give you an instant bump in your score. It's simple, it's legal, and it works in both the US and Canada. Instead of making just one credit card payment at the end of the month, pay twice a month. Here's why this trick matters in 2025. Most people assume their credit card company reports their balance right after you make your payment. They don't. In reality, lenders and credit bureaus see the balance that's on your account on the day they pull their data, usually right around your statement closing date. If you're like most people, you run up charges all month, then pay it off at the end. On paper, it looks like you're using a lot of your limit, even if you pay in full later. High utilization is a huge factor in new scoring models like FICO 10T. High utilization equals lower score. By paying twice a month, once in the middle of your billing cycle, and once before the statement closes, you're keeping that reported balance much lower. In other words, you're controlling the number the credit bureaus actually see. Lower utilization can lead to a noticeable score increase within a couple of cycles. You're not spending less, you're just timing your payments smarter. Let me give you a quick example. Imagine you've got a card with a $2,000 limit. You spend $1,000 during the month and normally pay it all at the end. When your statement closes, the bureaus see you using 50% of your limit. That's high. Now, if you instead send a $500 payment halfway through the month and another $500 before the statement date, the bureaus might only see a $200 balance left. Suddenly, you're using just 10% of your limit. Same spending, totally different picture. That's the power of this hack, and in 2025, this is even more important because scoring models are looking at trends. They're not only taking a snapshot but also tracking your habits over time. Showing consistent low balances can help you look like a low-risk borrower, which is exactly what you want. The best part, it costs you nothing. You're still paying the same total amount. All you need to do is mark 2 reminders on your calendar, maybe the 15th and the 28th of each month, and pay what you can before the statement date hits. It's one of the fastest, easiest ways to boost your score without opening new accounts or taking on more debt. So before the next billing cycle closes, try it. Make that extra payment. In a couple of months, you might be surprised at how much your score improves. Here's another move that can quietly push your score up without you doing any fancy tricks. It's about asking for a higher credit limit but doing it the smart way. Why? Because in 2025, the size of your credit limit compared to your balance is a major part of your score. The wider that gap, the better you look. Most people don't realize they can actually request a limit increase on their credit cards. And they really don't realize that asking at the wrong time can backfire. So let me break it down. Credit scores are heavily influenced by something called utilization ratio. That's just a fancy way of saying how much of your available credit you're using. If you have a $5,000 limit and you usually carry $1,500 on it, you're at 30%. If the bank bumps your limit up to $10,000 and you still carry $1,500, your utilization drops to 15% and your score can go up, sometimes in just a month or two. Same spending, but the number the bureaus see looks much healthier. The trick in 2025 is timing. Because lenders are using updated scoring models and stricter approval standards, you want to ask for an increase right after you've had at least a few months of on-time payments, no recent big balances, and ideally a boost in income or job stability. That paints you as a low-risk customer and makes an approval more likely. Some banks will even let you request a limit increase through their app or website without a hard credit inquiry. Always check first. A soft inquiry doesn't affect your score, a hard one does. Here's another pro tip. Instead of asking for a massive jump, go for a moderate increase. If you're at $3,000, ask for $5,000. That looks more reasonable and often gets approved faster. Once you've proven you can handle it, you can ask again in 6 months. And don't forget, a higher limit only helps if you don't instantly spend it. Think of that extra limit as a cushion, not free money. The goal is to lower your utilization, not to rack up a bigger balance. That's the part that will keep your score climbing. So next time you're checking your credit card app, look for the Request Credit Limit Increase button. Do it after a streak of on-time payments and a steady income. Play it smart, and this one simple step can quietly boost your credit score while costing you nothing. Easy, right? Okay, this next hack is one of my favorites because it takes bills you're already paying every month and turns them into a credit-building machine. No extra debt, no complicated setup. In 2025, both in the US and Canada, more and more credit scoring models are counting alternative data, things like your rent payments, utility bills, and even streaming subscriptions. That means you can get credit for being responsible with the stuff you already pay. For years, rent was the biggest bill in most people's budgets, but it didn't help their credit at all. You could pay on time for 10 years and it wouldn't move your score by a single point. Now, thanks to new reporting services and updated scoring systems like FICO 10T and VantageScore 4.0, you can have your rent and other recurring payments reported directly to the bureaus. And that can give your score a real boost, especially if you're new to credit or rebuilding. Here's how it works. Companies like Experian Boost in the US and services like Borrowell Rent Advantage in Canada let you link your bank account or upload proof of payment. They verify your on-time rent or subscription payments and send that data to the credit bureaus. When lenders pull your report, they see a longer, stronger history of on-time payments, which is exactly what they want to see. This can be a game changer if you're a renter or if you don't have a lot of traditional credit accounts. Even a few months of positive rent history can make you look more trustworthy. And it's not just rent. Think utilities, cell phone bills, even some streaming platforms. The key is to sign up for a reputable service. Make sure it reports to all three major bureaus in the US: Equifax, Experian, TransUnion, or to both in Canada. And keep paying on time. Here's a tip to make it work even better. Set your rent and subscription payments on autopay if possible. That way you don't miss a date and you're building a rock-solid payment history without thinking about it. Also, double-check your credit reports after a couple of months to be sure the new data is showing up correctly. This hack is especially powerful in 2025 because lenders are actively looking at these alternative data points. They know younger adults rent longer and use more subscriptions. Showing them you're consistent with those payments helps you stand out in a positive way. So before the next rent cycle hits, sign up for one of these reporting services. You're already spending the money, why not get credit for it? It's one of the easiest ways to grow your score without borrowing a single extra dollar. Now, let's talk about something that can quietly drag your score down even if you're doing everything else right: errors and old negative marks on your credit report. This one is huge because millions of Americans and Canadians have mistakes sitting on their reports right now, and most don't even know it. A simple cleanup can give you one of the fastest score jumps you'll ever see. Here's the thing: credit bureaus handle billions of pieces of data. It's not unusual for payments to be reported late when they were actually on time, for old debts to linger after they've been paid, or for someone else's account to end up on your report. In fact, government studies have found that roughly 1 in 5 people has at least one error on their credit file. That's a lot of unnecessary lost points. The good news? In 2025, disputing mistakes is easier than ever. You no longer have to mail long letters and wait months for a reply. Both US and Canadian bureaus now have online dispute portals and even apps where you can upload documents right from your phone. You can also use free services like Credit Karma to spot suspicious items before you start a dispute. Here's the step-by-step. First, pull your reports from all three US bureaus: Experian, Equifax, TransUnion, or both in Canada: Equifax and TransUnion. You can do this for free once a week at annualcreditreport.com in the US or through Borrowell or Credit Karma in Canada. Look for late payments you know were on time, accounts that aren't yours, or balances that show as unpaid when you've paid them. Highlight anything that looks off. Next, file a dispute online with the bureau reporting the error. Upload proof if you have it: statements, emails, payment confirmations. By law, they have to investigate, usually within 30 days. If they confirm the mistake, it must be corrected or removed. In some cases, that alone can boost your score within a month. And don't forget about old negative marks. Paid collections and old medical debts are now treated differently under new scoring models. If something is older than 7 years or has been paid, you can often have it deleted or reclassified so it hurts less. Many people don't realize they have that right. This hack keeps your score honest. You're not gaming the system. You're just making sure your report actually reflects your real behavior. Think of it like spring cleaning your financial reputation. Set aside an hour this week to pull your reports and start scanning. A few clicks today could save you hundreds on interest tomorrow. Before we wrap up, I want to share one last little-known move that can quietly build your score when everything else feels slow. I call these the hidden credit builders. They're perfect if you're just starting out, rebuilding after a setback, or you simply don't want to open a big new account. The first hidden builder is the secured credit card. Instead of being approved based on your history, you give the bank a small refundable deposit, usually $200 to $500, and they give you a credit card with that limit. Every on-time payment you make gets reported to the bureaus just like a regular card. Use it for something small each month: gas, coffee, a subscription. Pay it off right away, and within 6 to 12 months you can often graduate to an unsecured card. It's low risk, high reward. Another hidden builder is the credit builder loan or savings secured loan offered by many community banks, credit unions, and even online fintech apps. Instead of giving you money up front, they place a small amount, say $300 or $500, into a locked savings account. You repay it over a year, building a positive payment history. At the end, you get the money back plus a stronger score. A third option that's popped up in 2025 is becoming an authorized user on a trusted friend's or family member's old card. If they have a long, positive history and low balances, their good habits can help your score too. Just make sure they're responsible. If they miss payments, it can hurt you as well. These hidden builders are powerful because they don't require you to take on new debt or high interest rates. They're like training wheels for your credit report. And because new scoring models in the US and Canada are pulling in more data more often, these small positive accounts can start moving your score sooner than you think. The key, as always, is consistency. Pay on time, keep balances low, and treat these tools as stepping stones, not spending sprees. In a year or two, you can move from thin credit file to solid history, opening doors to better rates, better apartments, and better opportunities. So if you've been feeling stuck, try one of these hidden builders. They're simple, affordable, and they work quietly in the background while you go on with your life. Before we wrap up, let's clear the air on a few credit score myths that are still floating around in 2025. These old ideas are everywhere: on TikTok, Facebook groups, even at work, but believing them can actually slow your progress. One of the biggest myths is that checking your own credit score will hurt it. Totally false. When you check your score through a bank app, a free service like Credit Karma, or directly with the bureaus, it's called a soft inquiry, and it has zero impact on your score. The only time your score dips slightly is when a lender does a hard inquiry for a new loan or card. Smart people check their credit regularly to catch errors early. Another common myth is that closing old credit cards helps your score. It sounds logical, but it's usually the opposite. Closing a card can shorten your credit history and shrink your available credit, which raises your utilization ratio to things that can drag your score down. Unless a card has a crazy annual fee you can't afford, it's often better to keep it open with a tiny recurring charge and automatic payment so it stays active. You might also hear that carrying a balance boosts your score. Nope. Interest only boosts the bank's profits, not your score. You don't get extra points for paying interest. The best strategy is to use your card a little and pay it off in full every month or even twice a month. You'll still build history without throwing money away. Another myth says you need tons of credit cards to have good credit. Quality beats quantity. A couple of well-managed accounts plus a healthy mix like we talked about earlier works far better than opening 5 cards in one weekend. Each new application triggers a hard inquiry and lowers your average account age, which can hurt more than help. And finally, many people still believe collections can't be removed once paid. Under new rules and scoring models, many medical and small collections either don't count the same way or can be deleted after they're resolved. Always double-check your reports and ask for removal once something is paid off. The bottom line is that outdated advice can cost you money and delay your goals. In 2025, the smartest move is to know the rules, ignore the myths, and focus on consistent positive habits. That's how you build a strong credit profile that actually works for you, not against you. Alright, we've covered a lot of ground together. You've just learned a set of credit score hacks that actually work in 2025: paying twice a month, asking for higher limits the smart way, using rent and subscriptions to build credit, cleaning up errors fast, building a healthy mix of accounts, trying hidden builders, and steering clear of the myths that drag people down. Here's the thing, none of these moves are complicated or reserved for experts. They're small, practical steps you can start taking this week, whether you're in Chicago, Miami, Vancouver, or Montreal. Pick one or two, set a reminder in your phone, and try them out. The sooner you start, the sooner your score starts working for you instead of against you. Remember, a better credit score isn't just a number, it's cheaper car insurance, easier apartment approvals, lower interest rates, and more breathing room in your life. Every point you gain is money saved and opportunities opened. If you found these tips helpful, tap the like button so more people can discover them. And if you want more straightforward, no jargon advice about money, credit, and everyday financial hacks, hit subscribe and turn on notifications so you don't miss the next video. I also love hearing your experiences. Drop a comment below with the hack you're going to try first or any questions you have. Thanks for spending a few minutes with me today. You've already taken the first step by learning how the credit game has changed. Now it's time to use that knowledge to your advantage. See you in the next video and good luck building the credit future you deserve.